Morning, fellow traders, from wherever you're joining this series of the daily morning market call from. My name is Kefa Eric, one of the market analysts here at HFM. HFM, your financial broker here in Kenya, Tanzania, Uganda, South Africa, and from wherever you're joining this from. Feel most welcome today. Now, this is going to be a pre-recorded YouTube video to mean that you could go and review this on our YouTube channel at HFM Kenya. That is YouTube at HFM Kenya. Kindly like, subscribe, and click on the notification button so that you are not left out in future engagements. On our YouTube channel, we post very informative information that is very relevant for your smooth running or in your financial literacy journey, so that you can just check this video at the YouTube channel at HFM Kenya, like, subscribe, and click on the notification button. I'll give 3 seconds moment of silence to ensure that all of us do that. Very nice. Now, with that out of the way, we begin with our usual routine from fundamental analysis. Fundamental analysis to see the direction of different markets by assessing the economic health of the relevant assets in question. Now, beginning from today, we have had New Zealand retail sales year on year in Q3 coming out. Both we see have come out negative, suggesting which is lower than the one was expected. What implication would this have? It would have on the New Zealand pairs. It would mean that the New Zealand dollar has lost its strength, which would suggest a movement in a particular fashion, and we shall be looking at that on the USD and NZD USD pair, but we shall see it's moving in a bearish momentum. And as we move into the day, we are going to get euro based data from Germany. Remember, euro is a currency which is used by 20 countries in Europe, but it is important to note, out of those 20 countries, we had 4 powerhouses. So that was Britain, France, Italy, and Germany. But now Britain got out after Brexit, and after they exited, now we have Germany, Italy, and France. So Germany is a good country to watch out for. Any news they release regarding the economic health of the German state will tend to have implication on the euro pair. Moving on to Tuesday. On Tuesday, that's tomorrow, we expect new home sales. And new home sales is a key economic data which will tend to show us where we are on inflation. Are we heading towards the Federal Open Market Committee or the Central Bank of the United States marked inflation at 2%? Are we above? Are we below? If we are above, going to add on to information on to cut rates. If we are below, to hike rates, and that is followed during late New York session on the FOMC meetings with their follow-up meeting to indicate how the US economy is doing so far in regards to that. On Wednesday, we have Australia monthly CPI indicator coming out. If it comes out higher than expected or higher than previous, of course, it's going to increase the power of the Australian dollar. If it comes out lower than expected or previous, we are going to see much more decline in the power of the Australian dollar. Then we have the euro. Which country is this? This is Austria. Good to put here on the mark. We have Bank of Austria Manufacturing PMI Producer Manufacturing Index is also an indication of where the country is to indicate inflationary number, and if it comes out higher than expected, we are going to increase the power of euro to some extent. If it comes out lower, the inverse will happen. As we move down, we see we have quite a number of significant news coming out this week. We shall be looking at them every morning. Uh, we shall be looking at them every morning to assess the implication they have on those particular pairs, and also on commodities like gold and uh, and other relevant authorities that we look into on the daily morning market call on the usual suspects. Now, geopolitically speaking, we are having quite a number of things happening in the geopolitical space. Number one, we have the escalation of the Russian-Ukraine war, um, and we will see the implication of that on a commodity like gold, and we see that President Putin has authorized the manufacturing of high ballistic missiles, which is it's purported to travel 10 times faster than the speed of sound, and that can penetrate any military advanced protection gear. So that is going to send shivers down the throats of investors and retail traders like ourselves, and that will have implication of commodities, and our focus here is on gold. Also in the Middle East, we have the Hezbollah group from Lebanon sending up to 250 missiles into northern Israel and central Israel towns and urban centers, and of course Israel retaliating by bombing central Beirut, which is the capital city of Lebanon. All these things will have impact on commodities or gold, and especially in the Middle East we see the prices of oil escalating up because of the disruption of the supply chain. Now, having noted this, let's proceed to the charts. Nice. So usually beginning with gold today, we begin with gold, so the precious metal gold. So yes, we understand that the US economy is fairly doing good compared to its peers, and its peers I mean other economic global powerhouses like the Australian dollar, the Canadian dollar, the New Zealand dollar, the Japanese yen, the Great British pound, as we move forward to even the euro. But when it comes to the precious metal gold, we see it moving in a quite different fashion. As much as the US dollar is strong, we would like to see it reflect this by being bearish. But why have we been bullish for the recent days? This is because gold is understood in two layers. Number one, economic data, which shows the US economy is doing good. Nice, we understand that. But hey, wait, what is happening in the geopolitical space? We see a lot of conflicts escalating. We see the world going into tension, and we have two things to focus here. One is the Middle East war between Israel and its belligerent neighbors, where we see in Palestine we have Hamas, in Lebanon we have Hezbollah, and on the far end we have Iran, which they don't share a border but sponsors these enemies of Israel, as it is said to be. So this will tend to have fear injected into the market. When fear or uncertainty is in the market, we see retail traders and investors go into a safe haven, and gold provides that. So in short, that would mean when there is tension in the world, gold will tend to be in a bullish trend, and that has been the case. On this was on Friday. See, we broke above the 2691.61 key level, suggesting that price will continue moving up. Now, what informs price movement even much more bullish as we rally into the future? Perhaps to hit the highest ever recorded price of gold in the history of man, which is 2790.92. As long as the war in the Middle East and the war in Eastern Europe continues, gold will continue being bullish. It's important to know that. As we move into the future, more conflicts coming up will tend to have a bullish rally on gold. But when we see tension easing, we might see gold consolidating or being in a bearish run, of course, subjected to economic data and geopolitical tension. Moving on to GJ. For GJ, Great British Pound, Japanese Yen, we see we are in a little bit of consolidation for a while now, with a break to the downside here, and suggesting that the Japanese yen might be recovering. Remember, the data which was released early last week by the Japanese bank indicated that the Japanese yen is fairly doing well, but on reflection of this to the charts, would like to see on a lower time frame, perhaps the 4 hours. Just a minute. We see that is forming a bearish momentum with lows being taken. As long as this trend continues, we might be in a bearish run, and it would be safer to be looking for sells in that regard as we look for upcoming economic data. So when price comes and closes below the 193.142, it would be much more safer to get into those sales or wait for it to retrace much more back to premium, so as to get a better risk to reward, of course observing risk management. For USD card, from a daily time frame, we see that we broke above the 1.93775, suggesting that gold was gaining strength. And as it is right now at the time of this recording, we are seeing that the US card has lost by 0.19%, suggesting that the Canadian dollar might be gaining strength. But hey, wait, until we see technically on a lower time frame like the 4 hours major lows being taken, we would not jump in quite quickly. So possibly until we see the 1.38423 being taken out, we would not jump in. And we see that the market opened with a gap right here, and 48% of the time this gap has to be filled. That's why possibly we see this candle, Marabuzu candle, printing up to fill this gap to a certain extent. But as it stands, the Canadian dollar is regaining over the US dollar, and we see we're in a slightly bearish trend. For USD JPY, from a daily time frame, we see that we are in a bullish trend, and we see that we closed above the 155.357. that was on last week on Friday. However, price is tending to retrace a little bit back, again suggesting that the JPY might be doing better. And we see right now the JPY has lost by 0.34%, suggesting a slight retracement to the downside as the day unveil. As we expect new economic data coming from the USD tomorrow, we might see price moving much more faster in either of the direction. For USD CHF or Swiss franc, we see that we're in a clear bull trend, and as of this morning, we are kind of trying to retrace back to get at discount point. But today in the morning, price closed above the 0.89120, suggesting that price might be going much more bullish into the future. until we see major highs being taken out on a much more lower time frame, like we see right here, with a gap being filled, giving much more confidence to hoping for buys as we move to the upside. For USD, for AUD USD, we see that price is kind of consolidating, not giving us a clear run of market direction. Opened up with a gap, trying to fill that gap. It would be important to wait for it to fill that gap to a certain extent for us to get a much more clear direction. But as it is, the Australian dollar is gaining over the USD, suggesting a bearish trend to the downside. So if I go to a much more lower time frame, I would like to see lows being taken out, but we see we are yet to fill all this gap. For those who don't know what a gap is, a gap when market opens with much more pressure to the upside or downside, leaving a gap where we don't see candles printing. That gap tends to be filled 48% of the time, suggesting that price will tend to move towards filling that gap for it now to continue moving in the intended direction. Nice. For GBP USD, also opened with a gap. Let's go to a daily time frame. Opened with a slight gap, which can be seen on the 4-hour time frame right here. We would like to see that gap being filled to a certain extent, but if that does not happen, we want to see price moving clearly either upside or downside. Right now we see that we're in a consolidation or a ranging market. Price is neither moving in an uptrend or a downtrend, so would like to see it break this particular market cycle that it is right now, because it's not super profitable for us as retail traders. Moving on to Euro USD. Moving on to Euro USD, we see that price has been in a clearly bearish trend, and this is because of the dominance of the US dollar toppling up its power over the euro, and we see that it's in 0.55%. And also it's important to see that we opened with a gap, so this gap could create much more certainty for us retail traders. By gap I mean this space right here. It's drawing up, taking a second. This space right here, from when the market opened, this space has to be filled, so would want to see price coming to fill it to a certain extent before we have a clear market direction, right? But technically speaking, we see we are reacting from a key level, a key support here at 1.03993. So as we move into the future, it's important to remember to observe risk management. And by any chance, this is not financial advice, this is purely for educational purposes. Kindly do your due diligence, and see you tomorrow, the same place, the same time, to do things the same way that has proven profitability. Until then, keep safe, and God bless.